everybody, Rachel Micallef here from Empire Tax Professionals. As many of you know, I'm the CEO of Empire Tax Professionals and now Wealthy CEO Accelerator. It's our coaching program that helps business owners really understand their finances. I'll go over that a little bit later, at the end of the live. And I'm also the CEO of, as I mentioned, Empire Tax Professionals, licensed by the IRS and licensed in 50 states. And I tell you that because there are a lot of accountants and a lot of bookkeepers out there that give advice, but they're not really authorized to give you tax advice or really give you information that will really help business owners all over 50 states. A lot of accountants give information based on state specific or bookkeeping specific or payroll specific. I'm licensed by the IRS and I have a firm that specializes in bookkeeping, payroll, taxes all over. Every single tax type that really is important for a business owner. And today I want to speak about something very important that most accountants don't really speak about. And a lot of business owners are confused as to, how much they need to be paying themselves and what is considered to be a reasonable compensation when you have an S Corp. Please note that this does not, it's only for S Corps. If you're a single member LLC or a multi-member LLC and you are not taxed as an S Corp, this does not qualify. You don't qualify, and this does not apply to you. Single member LLCs and multi-member LLCs who are not taxed as an S Corp are not allowed to be on payroll. We recently had a client, an Amazon seller, and it doesn't really matter how much they make. They could be making $5 or $500,000. And in this specific situation, they were making like $400,000 or $500,000 annually. But again, it doesn't really matter. And they were a single member LLC paying themselves on payroll. And when they came to us, we needed to amend their entire returns because they were not allowed to be on payroll. So it's crucially important to make sure that you are not paying yourself if you are a single member LLC or a multi-member LLC and you're not on payroll. A lot of these payroll companies don't really look at your entity and they don't really give you guidance based on your entity. So just be really careful and just be careful with that. So today, again, I will be speaking about why it's important to pay yourself a reasonable compensation. And if you don't pay yourself a reasonable compensation, then you have a huge risk of getting audited. And if you do get audited, you're gonna waste and you're gonna spend so much money on penalties and interest plus aggravation and energy, proving to the IRS that proving to the IRS things that it's just a headache. Nobody wants to go through an audit. So what you want to do is you want to make sure that you're preventing everything you can to make sure that you're compliant. It's just like health, right? You go to the gym, you work out, you drink healthy drinks just for you not to get sick. Same thing with accounting in a way. You want to make sure that you're doing everything. You're hiring the proper accountant. You're doing everything you can so you can legally pay less taxes and pay yourself a reasonable compensation and make sure that you're compliant in all areas in IRS and your state and local agencies, okay? So again, here are the top 3 things that you need to know. You need to pay yourself a reasonable compensation if you are an S Corp. And if you don't, the IRS may assume and let you know how much your payroll should be. So for example, let's say an S Corp makes $200,000, right? And the profit is $100,000. The IRS may say, okay, let's say Melanie, for example, hey Melanie, you did not pay yourself a reasonable compensation. You didn't pay yourself anything at all. So the IRS may say your payroll should be $100,000, 100% of the net. I've actually heard the IRS do this, and then you end up overpaying in taxes because you did not pay yourself. You now increase the risk of getting audited, and now the IRS is going to tell you what your payroll should be, which you don't want. What you do want is making sure that you're paying a reasonable compensation so you can reduce the risks of audit, and then moving forward, you're not going to get audited. So the IRS won't really tell you what your payroll should be. I have, S Corps that are in business for 20, 30 years, and they've never been audited because they've been paying themselves consistently and a proper, reasonable compensation based on the gross revenues, based on exactly what they're doing in the business. And they've never been audited because they have proper guidance. Now, if you're a business owner making $100,000 or even $50,000 or even $300,000 and you're not paying yourself anything, that's a huge risk. You really need to be paying yourself a reasonable compensation if you're an S Corp, because owners drive revenue. Owners generate the income. And the IRS may say, who's really generating the revenue? For example, if you Google the 1120S corporate return, just Google it, 1120S corporate IRS return, you'll see line 7 specifically asks for compensation of officers. Now, if that's 0 and line 1, which is gross revenue, is 200,000, 300,000, oh my God, and the higher it goes, the higher the risk you have. So let's say it's 300,000, 400,000, and line 7 is 0 or an unreasonable amount. The IRS may send you a notice automatically and say, hey, you generated all this money, your reasonable compensation is not accurate. Let's review exactly what you do. And they may ask you or give you a questionnaire specifically as to what you do in your day-to-day to make sure or to calculate your reasonable compensation. So a lot of business owners come to us and they say, Rachel, how do I know how much to pay myself? I'm an Amazon seller. I'm a, marketing or digital marketer. I don't know how to pay myself. So normally the IRS would say, go to monster.com, like the career site, or Indeed, and look for someone else that would do exactly what you're doing. Like I would create a job description and say, okay, I'm looking for someone to manage, team members, to look at the marketing department, to review the sales department. You have a detailed job description, right? Then what would you pay someone else to do that exact job? Would it be $50,000? Would it be $70,000 annually? It may be a little bit higher on Indeed and the online job sites, but that's where approximately you would say, now you have a ballpark of how much you need to pay yourself. And that's how you would know how much, should it be 50,000 or whatever it is. People just come up with the numbers off the top of their head without any background information. And that's how people fail and end up overpaying in taxes or really underpaying. And then you increase the risks of audit and increase the risks of again, paying penalties and interest, which nobody wants. So it's really important to make sure that you have the proper guidance from an accountant who asks you specific questions and lets you know how much your salary should be based on the state that you're in, the industry that you're in, right? Because every industry is different. How many years of experience do you have? Do you have a college degree? Do you have what degree, right? Because if you're a master's student, then you need to be paying yourself a little bit more. If you're a high school graduate, then you would pay yourself a little bit less. Again, it really depends exactly what you're doing and what state you're in. And at least you need to pay yourself. If your business is even struggling, the IRS says they don't really care if your business is struggling. And that's the scary part. People say, but Rachel, I'm not making any money. Where am I going to pay myself? Just like you would pay another employee, whether your business is generating money or not, right? You would still pay another employee to do the marketing, or you would still pay an attorney to, whatever it is. You would need to pay yourself the exact same way. The IRS doesn't care if your business is generating revenue. They do care, but they don't care if your business is losing money, because you normally would go to savings and pay yourself a reasonable salary. Now, it really depends on how long your corporation is. I've seen businesses the first year, they don't really pay themselves, and then the IRS is okay with it, and then the second year they pay themselves a higher amount, and third year as revenue generates, they increase the revenue and they're able to pay themselves a little bit more. So it really depends on many factors. Okay, I had a recent client who made like $150,000 and he paid himself $100,000 a year. And I'm like, why did you pay yourself so much? He goes, because he netted that amount. And I'm like, okay, but who told you to pay yourself such a high amount? He said, I just came up with that myself. He had a CPA, he had a bookkeeper, and he had a payroll company. And believe it or not, this is obvious. Nobody really gives him any guidance because the CPA prepares their returns. The payroll service provider just processes payroll. They act like robots. And then, the bookkeeper just does the data entry. And he just came up with his mind and said, okay, my salary should be $100,000. That makes sense. He overpaid in taxes, I would say by $15,000 every single year, because he came up with the amount on his own without speaking to any, accountant, and that reviews the entire picture. So if he came to me, I would say his salary should be maybe 50 to 60. Again, I don't remember what state he was in, and it really depends on, many things, but he overpaid himself. And you don't want that either, right? You don't want to underpay, because then you're avoiding to pay taxes, and you don't want to overpay, because then you're overpaying in taxes, and nobody wants that. So it's crucial, it's very important to make sure that you're paying yourself a reasonable compensation, especially if you're an S Corp. Now, a lot of business owners want to make sure that their salary is as low as possible normally, because you want to pay the least amount of taxes. But the IRS wants your salary to be as high as possible, so you pay the highest amount, the most in taxes. Now, then people come to us and say, what's the right amount? It's like the price is right? You want to make sure that you're paying yourself a reasonable compensation. And that's when we do a full-blown audit and ask you specific questions to make sure that you're paying yourself a reasonable compensation. And guys, that one thing can really create a nightmare if you don't pay yourself a reasonable compensation. Because when the IRS audits your returns, or any returns, they will look at different things. So for example, you're looking at the 1120S corporate return, right? Line 7, compensation of officers, let's say it's $20,000 a year, which is super, super low. $30,000 a year is also very low. They'll look at that and they'll say, okay, fine. Let's say the owner is silent. It's a silent partner. You're not really in the business, so you're paying yourself the least amount. Fine. Line 8 shows salaries and wages. Now, if that's zero, then you have another problem. The IRS would say, how are you generating, $400,000 or $200,000 in income without you paying yourself, right, a reasonable compensation, and without any employees on payroll? The next question the IRS would probably say is, are there any independent contractors that are on, that the owner is paying that should be employees? So then they look at, the independent contractor section and say, how often are you paying this person? What exactly is this person doing? Are you paying them to their business or their personal name? And they want to see if you're misclassifying independent contractors that should be employees. Now you have a whole different issue. So one thing really leads to another. They're going to look at your compensation of officers, then they look at salaries, then they look at independent contractors and making sure that you're not misclassifying any employees. Then they're going to go to the Department of Labor and say, hey, I don't know if that really happens, but I've seen people get audited by the IRS, and then all of a sudden, New York State comes after them, and Department of Labor and other agencies, workers' comp, for example, comes after them, because I feel like the agencies really do communicate, and it's just, and what happens also, they may go back to 3 years and say, if the first year was an issue, then most probably you didn't pay yourself a reasonable compensation for the prior years, and let's go audit the prior 3 years. Now, they may even audit, the expenses, the details of the expenses. If something looks off in the return, they may extend the scope of audit and say, something doesn't make sense, let's look into it and audit other things. One of the things that is obvious, right? So if you look at a return, you won't really know if the expenses make sense. Depends if you have like a phone bill of $5,000 or $10,000. That may scream at you saying that doesn't make sense. But line 1, right, may show $200,000. Line 7, the IRS has specific lines, and I don't know the exact numbers, but they could say anyone that makes more than $100,000 on line 1, and if line 7 is less than $40,000, or actually that's not a good example. Let's say they would say if line 1 is above $500,000 and line 7 is less than $100,000, then go send them a notice and audit them, and let's review their reasonable compensation. And they could say, okay, it could be in New York City, it could be in California, like the high level states where things are expensive. And they could do an automatic audit if they wanted to. So making sure that you're paying yourself a reasonable compensation is so important. Now, I also went over in my other live, the details of entities, such as single member LLCs, sole proprietors, multi-member LLCs, C corporations, S corporations. And we have so many business owners coming to us who are the wrong entity and who are overpaying in taxes just because of that one mistake, that they are the wrong entity. So if you went to LegalZoom, or if you went online and did the entity yourself and you did not know what entity makes sense, then most probably you are the wrong entity. We have a lot of business owners that come and they think, oh, I could probably open my entity myself. Great. They go online without any guidance from an accountant and they open the entity on their own. And because, they don't have tax experience and accounting experience, they overpay in taxes, because the one thing that business owners are truly missing on a daily basis or monthly basis is guidance. You need someone from an experienced perspective and say, hey, based on your specific situation, you should be a single member LLC or an S Corp. Or now that you're an S Corp, hey, don't forget, these are the 3 things that you really need to know, such as paying yourself a reasonable compensation. But hey, before you do that, you need to make sure that you're registered with Department of Labor, because if you don't, then there are fines. So there's so many things that go into making sure that you're compliant in, the IRS and payroll and sales tax and federal taxation and state taxation. There's so many things that go into it that you never want to speak to one person that just focuses on one thing, such as bookkeeping or just payroll or just sales tax. It's so important to speak to one accountant who can help you with all areas. And I can't express, I mean, we do this, and I'm not saying that everybody should come to us. And I'm not saying that. I'm really saying every single business owner, whoever has a separate payroll company, I could guarantee that you're overpaying in taxes, because that payroll company is acting like a robot. Whoever has a separate bookkeeper who does not give bookkeeping or who does not give tax advice, I am almost guaranteeing that they're overpaying in taxes, because they're not giving them advice on what is deductible and what is not deductible, which is something that every single business owner really needs to know. And bookkeepers, and they're great. I love them. They're really great people. But what they do is their main job is to categorize expenses to the right category. Their job is not really to advise clients or tell them, hey, did you know that you're able to hire your kids so you could lower your taxes? Or did you know that you need an accountable plan to write off some of your expenses? Did you know that you needed to pay estimated tax payments every single quarter to make sure that you don't get an estimated tax penalty at the end of the year? These are things that bookkeepers don't do, and they don't know. And you want to make sure that you're compliant. And the only person that can really help you with all of, bookkeeping, payroll, and sales tax and everything is someone that really helps businesses with everything. I've seen accountants only focus on individual taxes, and then I see accountants just process, corporate returns or just payroll. You want to make sure, as a business owner, if you're making more than $10,000 on a monthly basis, it is a must that you have an outsourced CFO or an outsourced accountant who can process the bookkeeping for you and look at it and make sure that every single expense is properly deductible legally. And if not, how can you convert those expenses so you can deduct it legally? Like, have a conversation with your accountant. Then they could tell you, or we tell our clients, how much your payroll should be based on looking at your bookkeeping numbers. Your payroll would be different if you're making $10,000 gross or if you're making $50,000 gross, right? But if the bookkeeper and the payroll person does not communicate, you're just coming up with a number from the top of your head, and most likely it will be incorrect. It's like driving blind. You want to make sure that an advisor is looking at your entire picture and they're saying, okay, I'm looking at your books, your payroll should be X amount, and then ask you, hey, I see that you're selling tangible items, or ask you in the beginning of the relationship, are you selling tangible items? Now you have a sales tax, and now you have a sales tax obligation in multiple states, right? Things like that. Again, bookkeepers won't tell you about the sales tax issue. Robots, basically payroll service providers, won't tell you about the entity selection, but most advisors most accountants who act as advisors like we do will give you advice on every area and make sure that you're paying the least amount of taxes legally and you're compliant, right? People don't understand how important it is to be compliant. They say, I want to save money on taxes, but you are saving money on taxes if you are compliant. You're avoiding additional penalties and interest, or any penalties and interest, if you are compliant. For example, if you file your returns on time, if you file your payroll returns on time, if you file sales tax and make your estimated tax payments quarterly on time, you are avoiding additional penalties and interest because you are compliant. So it's truly important to make sure that you have the proper person guiding you. And I want to make sure that I am going over everything. So I mentioned the 1120S return, right? If line 7 is 0, the IRS may ask who is generating that revenue. That is crazy. I mean, I spoke to a client recently who made $1 million a year, and their salary was 0, and he wanted us to do an audit. He said, Rachel, I love my accountants. They give me advice and everything. And I said, okay, great. Let me review your returns. And I'll give you details of, I'll do an audit basically, I'll do an overview, and I'll give you a list of things that I have questions about. And the first thing that I saw was line 7 was 0, and it just screamed at me, and I said, oh my God, this is a huge red flag. Here are, IRS regulations. This is where boom, 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 where it's proof what I'm saying is 100% accurate. And I sent it to him, and he said, oh my God, you are 100% right. I am firing my accountant immediately. And he's been a client for a year or I don't even know how long. But it's just, and you know what? This happens so often because a lot of accountants, they act like robots. They say, okay, tell me what you have, right? You give them, hey, I need to get my individual taxes done. Okay. Hey, I need to get my business return done. Okay, they'll get it done, but they won't say, hey, you're making too much money. You should be an S Corp, or you're making too much money. You need to be paying estimated tax payments. Or did you know that you could hire your kids? Like, just advice and questions. And a lot of accountants don't act as advisors, which is ultimately hurting business owners because they are overpaying in taxes if you are the wrong entity, if you're not paying proper estimated tax payments, and if you're not compliant, and nobody wants that. So just want to make sure that I am making sure that I'm covering everything. So by the way, another thing that I've been seeing, owners should not be on a 1099. I'm seeing so many people, that are paying themselves on a 1099. You can't be an independent contractor for your own business where you are 100% shareholder of the corporation. That does not make sense. A independent contractor you have no control of the business, but when you're the officer of the company, you do have direct control and make, the decisions for the business. So when I see business owners paying themselves a 1099 at the end of the year, that's a huge red flag. And we normally don't want to work with clients like that. Or we would just tell them, hey, this is incorrect. Moving forward, you should be on a W-2. And because it's a red flag. You can't be an independent contractor for your own business. And I see a lot of people also making major and misclassifications as far as W-2 versus a 1099s. I may probably, if I see a lot of interest, I probably will do a video after this one, because one of the biggest things that I see is business owners paying independent contractors when they should really be employees. And there's a specific checklist that the IRS uses to make sure that employees should really be employees, or people should really be independent contractors. And there's a specific guideline on W-2 or employees versus independent contractors, and I could go over that later. So the most important thing is making sure that you're paying yourself a reasonable salary. That is one way that you could reduce the risk of audit. Also, the second way, really quick, and I'm not supposed to be talking about this, but if you're a sole proprietor and a single member LLC and you are not taxed as an S Corp, then you also have a high risk of getting audited. You also are overpaying in taxes if you're a single member LLC and you're not taxed as an S Corp. So you want to make sure that you have someone with a fresh set of eyes they are reviewing your entity selection, they're reviewing your bookkeeping numbers, everything that you're doing, you're deducting legally, and you're paying your estimated tax payments quarterly, which is 100%. I highly recommend it, because the number one complaint that we see from online entrepreneurs is the number one, like I'm telling you, I had a client last year I always ask people, like, why are you firing your accountant? And he tells me, I had the best bookkeeper, I had the best CPA, but I think he said, like, in February, his accountant told him that he had to pay $100,000 or like a huge amount right before the tax deadline. And he said, Rachel, it doesn't make sense. I had a bookkeeper all year round. I had an accountant all year round, and I really have a good relationship with them. That's what he said. He said, I really like them. I loved working with them. They were really responsive and everything. But why in the world would I pay a huge amount or an unexpected tax bill 3 days before the tax deadline? And nobody wants that. If your accountant tells you owe $20,000, $30,000 before the tax deadline, and you were not, like, you were clients, for a whole entire year, that's really unacceptable. Unless the accountants told you what you needed to pay and you didn't have the money, that's another thing. But if you have a bookkeeper where they're looking at your numbers and they're looking at your net and they're not telling you, hey, you need to be paying 20%, 10%, at least something to the federal, something to the state, you're making all this money. Or in October, what we do with our clients, we go over the year-to-date profit and loss report and we say, hey, these are the 3 to 5 tax strategies that you are able to do to reduce your taxable liability. Most accountants don't do that. And I see that every single day, literally. Like, I speak to business owners and I say, you had a, $20,000 tax bill. Did your accountant tell you that you can hire your kids? Did your accountant tell you that you're able to rent your home to yourself? Did your to your business? Did your accountant tell you that you could? There are so many other strategies that are incredibly, helpful, that lower your taxable liability. And I asked him that, and he said, no, my accountant did not do that at all. And I said, I'm sorry, the year is over. There are just a few strategies that I can help you, but I wish you came to me during the year so I can give you more strategies to lower your taxable liability. But you overpaid in taxes because of who you hired. The business owner hired the wrong person. So a lot of accountants, they don't do tax planning. That's another thing they don't do. That tax planning is like a separate division that most accountants have, or there are accountants that just do tax planning. And now you need to speak to another person. And I know a lot of business owners, they're like so tired of speaking to multiple people. So I had another client who said, I'm so fed up. I'm talking to the bookkeeper, and the bookkeeper doesn't know what the payroll person is doing, and the payroll person doesn't know what the accountant is doing. And then he said, Rachel, I need a tax planner. I thought that's what my accountant is doing. I thought that's what, that's what I'm paying my accountant for. No, you need a tax planner. You need someone that understands your numbers, that's looking at your financial reports and say, hey, these are strategies that we can help you lower your taxable liability. Most accountants don't do that. We actually do that in our company, and we include tax planning as part of our virtual CFO service. And I know a lot of business owners are probably thinking, oh my God, I'm not making enough. Do I need an outsourced accountant? So our service fees begin at, I think it's $550 a month right now. And it obviously really depends on how many accounts you have, how many employees you have, and how many states you have sales tax obligations to, etc. But $550 a month on average, maybe a little bit more, depends. We do the bookkeeping, the payroll, processing payroll, filing the payroll returns, filing like one state of sales tax, I believe. It depends on what state and everything. Filing the corporate returns, filing the individual returns, making sure estimated tax payments are properly calculated, and making the payments on behalf of the business owner, because the business owner, the entrepreneur, is checked out. They are so busy with so many different things, hiring and marketing and sales and operations and delivery. Who knows when they're going to make that estimated tax payment? And if it's late, you're going to get penalties and interest, and we don't want that. So we make the payments for the client. Then we discuss the bookkeeping reports with them. Support is included. We file the 1099s at the end of the year for them. We call the IRS and state for them if they need to set up a payment plan, or they have an IRS notice. All of that is included in the monthly $550 fee. And we have so many clients that we do this for, and the peace of mind that we give them helps them make so much more money, because Now they know that we help them, we help them calculate the reasonable compensation. And if they get an audit, if the IRS ever audits them, I have backup of everything. Every single number goes to a bank statement or a credit card statement. Every single thing is reconciled. I'll tell you a really quick story, which is like crazy. I had an Amazon seller hire a bookkeeper that specializes in Amazon. I don't know what that means, but specializes in Amazon sales. And he came to me last year and he said, and I said, what's your pain point? Like, what are you struggling with? He said, I really think that I overpaid in taxes and I just paid the IRS $70,000. I said, okay. We hung up. He told me whatever. We reviewed his books and we saw that his bookkeeper never reconciled his credit card statements from June until December. And I said, hey, let's say his name is Mike because we want to keep it confidential. I said, hey, Mike, did you know that your accounts are not reconciled from June to December? He said, oh my God, that's crazy. I had a ton of expenses. He made a ton of purchases for, during those months. And he said, let me go to my bookkeeper and ask her, what happened. He goes to his bookkeeper and he says, hey, I see that you didn't reconcile my credit card statements from June to December. Can you please tell me what's going on? She said, hey, Mike, you never gave me those statements. And I'm like, oh my God, like, I was just so frustrated. What do you mean? He's like, what do you mean I never gave you those statements? She said, you never gave it to me. And then he says, but you never asked me for it. Like, I'm a busy entrepreneur. I'm literally all over the place. If you asked me for those statements and followed up with me, I would have given it to you. And she said, no, you never gave it to me. So I assumed you didn't have it, or I don't know. And when we amended his returns, he got like, I think $30,000 to $40,000 of refunds because of that one mistake. Now, guys, if you have a proper accounting system, like a proper accounting structure where you have one accountant doing it all, and accountants have a very high standard, especially people, that are licensed by the IRS, licensed enrolled agents. We have a specific standard where we're just obsessed and we want to review everything. So we make sure that every single account is reconciled from January 1st. Let's say, even if, let's say the month begins January 3rd, we would reconcile December statement to make sure that we get in those 2 days, because the IRS will audit you if you did not include the income for those 2 days. So January 1st up until December 31st, we reconcile everything, credit card statements, even if it's zero, because sometimes there's a $5 interest charge, or sometimes there's like a $10 bank service fee, whatever it is. We reconcile everything until the end to make sure that never, ever happens. And he was extremely frustrated and couldn't believe what goes on in the industry when people call themselves nationwide accountants, or people that specialize in Amazon sellers and things like that. So you want to make sure that you have the proper person, that is perfect for your business and that can help you with all types in your business. Because as you grow, you want to make sure that your accountant can grow with you, right? We have clients that make $1 million a month, and we have clients that are, making, I guess, $150,000 a year. I think that would be the lowest amount. Probably, because $550 a month, I don't know if anybody can afford it if you're making less than that. But what we also created is we created a Wealthy CEO Accelerator coaching program where we teach business owners everything I'm teaching you right now, where we teach them how to reconcile your bank account first, how to reconcile your credit cards, how to review your numbers, how to register with Department of Labor in your state, and how to review how to make sure that you're registered with Department of Labor to make sure that you're compliant. And then you may need workers' comp, like just helping you, because sometimes you may not be able to afford an accountant right away. So there are specific things that you may want to do yourself with the approach, or with an accountant's guidance. And we will help you with that. And we will teach you, when you're looking at your numbers, how to look at your net, making sure that your net is accurate. So a lot of bookkeepers, they deduct personal expenses. And when you deduct personal expenses, what happens? Your net is lower. And then you think, you're calculating your estimated tax payments based on the wrong net, which is crazy because at the end of the year, you may have an unexpected tax bill if your bookkeeping is wrong. Now, if your bookkeeping is wrong, guess what happens? Your decisions are wrong. You hire people. You may hire someone that you may not even afford to. You may not pay yourself a reasonable salary and you want to put that in your bookkeeping numbers. You may get an office space and you can't even afford it. Your bookkeeping numbers tell you everything. How much to pay yourself, if you can afford hiring someone else or getting a bigger office space or getting a commercial space or hiring VAs and things like that. Your bookkeeping numbers are the foundation of your business, and you need to understand, or you need to know how to understand those numbers. And if you don't, that's a problem. It's a problem. And a lot of business owners don't know what they're looking at. They don't know their gross. They don't know their expenses. They don't know what subscriptions they need to disconnect or discontinue because they no longer use it. Like, you could make so many decisions just by looking at your numbers. And you could even increase your payroll. You can hire your kids. There's so many things that you can do to reduce your taxes legally and to, when you're reviewing your numbers, it's incredible. So if you have any questions, let me know what your questions are. I'm launching this Wealthy CEO Accelerator shortly. And I mean, it's going to be incredible. I'm going to be doing a live with another enrolled agent, and we'll be just sharing a lot of value every single week and answering specific questions from everyone just to make sure that you are the proper entity. And we're going to give specific guidelines and specific advice based on that person, because we want to make sure that you never take general advice from anyone, right? You go to a doctor, they draw blood, they review your blood work, and they give you specific medication for your specific situation. It's the exact same thing when you go to an accountant. They need to review your tax returns. They need to review your financials. They may ask you what state you're in. They may ask you how much money you're making, what industry you're in, and then give you guidelines. Financial information should never be, things that you should Google. You don't want that. You want to make sure that you're speaking to a professional who has years of experience and has experience working with thousands of business owners, and they're looking at everything, because you may not know what you don't know, right? You may not know things like sales tax or estimated taxes, or watch out for the local county, or watch out for this. You may not know that. I had a client, it's really funny. I had a client who paid his kids on a 1099, and I'm like, oh my God, how can you're not allowed to pay your kids on a 1099? He's like, yeah, I just paid I paid my kids every single week, and at the end of the year, he thought that he would pay himself, he would pay his kids on a 1099. And I said, oh my God, you did everything wrong. And he said, I just looked it up online and on Google, and I thought I did it right. I said, no, you need to file payroll returns. First, you need to register with Department of Labor. I think you need workers' comp, depending on the state that you're in. You need to file payroll returns every 3 months. You need to file a 940 at the end of the year. You need to give them a W-2. And he's like, what? I had no idea. And exactly, there may be things that you may not know that you need, and speaking to experts and giving, and an expert can give you one advice, like I mentioned earlier, where the Amazon seller, the bookkeeper, didn't reconcile the statements from June to December. He had no idea, and he didn't know how much he's losing, and he knew something was wrong, but he didn't know what it was because he doesn't know how to look into his books. So you may not know what you don't know, and that's the scary part. You don't want to wait years later where somebody says, you overpaid in taxes by $50,000 or $100,000, and that could have been a down payment on your home, or that could have been money that you had reinvested into a marketing department who can make you so much more money. Or, I had another client who was in his 60s, and he was an insurance agent, a sole proprietor all his life. I could guarantee that he overpaid in taxes at least by $200,000. And he still owes the IRS, I think it was like $50,000, $60,000. It's crazy. And he said, Rachel, you and your team helped me in the year. We helped him in 1 year. We were able to help him more than his accountant helped him in 40 years, because his accountant is old school. They're local. They know just the things. They don't think out of the box. A lot of them. I mean, that's what school. They don't teach you that. When I went to school for accounting, I have a bachelor's. They don't teach you. They just teach you how to prepare returns. They teach you how to be historians. They look at the past. They say, okay, how much money did you make What are your expenses? Oh, it goes in this line. Oh, it goes in that line. Please sign here. This is how much you owe, and have a good day. Like, that's such a boring relationship. And a lot of these accountants don't even look at your books. You know, I had another client who was a contractor, and he got audited by the IRS. He had an accountant in Manhattan, and he said, oh my God, I hired the best accountant. She's the best, blah, 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 until he got audited. He said, Rachel, the biggest problem was he had a separate bookkeeper and he had an accountant. And the accountant did not review the books that the bookkeeper did. So the accountant just took the profit and loss report. And normally most accountants do that. They assume that the bookkeeping is correct without reviewing the QuickBooks file. And there are a lot of expenses that were not, included. There was a lot of income that was not included. And the IRS audited specific things like, I think it was rent, W-2s, like 3 or 4 items on the return. And the CPA said the IRS is correct. Now that I'm reviewing your numbers, the IRS is correct. But why couldn't the CPA review the numbers before? And honestly, I mean, I understand the CPA in a way, because the CPA was not hired to review the books. It's the business owner that hired the bookkeeper. And if you hire someone that's data entry or a VA to do your books, it is your responsibility to hire the proper people. So he said, I'm done hiring multiple people. I just want one company to do it all. And we were able to, help him with bookkeeping, payroll, sales tax, and give them guidance, etc. So it's crucially important to have one company under one roof help you with all tax types. So they're giving you specific guidance based on each other, and they're looking at the entire picture and giving you advice based on how much money you're making and payroll, etc. So if you have any questions, let me know what your questions are. I'm extremely excited for this Wealthy CEO coaching program. We're going to give you lots of templates, making sure you know your numbers, how to process payroll, how to process your sales tax, answer any questions. And I mean, if you have that guidance from the very beginning, how much money can you save? And if you were able to save at least at a minimum, $10,000 annually, where are you able to put that money? If you're, and I think if somebody goes through the program, I think at a minimum, they would at least save $5,000 to $10,000 annually, depending on where they are. The more money they make, they will be able to save a lot more. And we're just going to share specific strategies on what they need to do so they could save money. So thank you so much, everybody, for watching. Thank you. If you have any questions, let me know what they are, and I will talk to all of you later. Thank you and have a great day. Bye.